where the bad pianos start to show. Keys all out of tune, just watch them go. Welcome to Adam and Joe talking nonsense on the Outside Scoop podcast show.
Welcome to, I think we're calling it an emergency broadcast. Sirens firing everywhere.
Episode 10 is your first emergency broadcast service.
Emergency broadcast
Do
service.
not attempt to adjust your television sets.
Stay inside.
Yeah. Duct tape the windows.
Run the bath.
Crack out the oats.
Sit down.
And start enjoying those Fox mints.
So we're going to pick up where we left off with episode 1 of investment stocks, Gamestop.
What episode was that? Do you remember?
Episode 6?
I think it could have been 6.
Episode 7? I don't know. It was a few. It might not even be out yet. But this is getting pushed out.
This could be getting pushed out early. We don't know yet. I don't know yet.
This might go out ahead of episode 7.
It won't. I'm holding it back. I'm not giving them the little tasty treats early. This is for us.
We have a situation, I think.
Something has definitely happened.
Something has definitely happened. The plan was for the next episode to be, in this series, to be about, I guess, the last 3 years.
It was the continuation of the story after DFV went silent, wasn't
it? DFV went silent.
Yeah.
And we were then going to talk about 3 years of
silence from nobody, nowhere at all.
Nobody.
There was some really good Reddit stuff. I think we mentioned the Reddit stuff, but there was some. I think towards the end of it that I was involved, or at least watching, it started to become a bit tenuous. But the early stuff, very good, I thought.
Lots of deep dives into how the markets work, what market makers mean, what brokers do, how big banks work. So
a lot of really basic information that you just don't get, you don't know, you'll never be taught it.
You don't know. So we learnt a lot over those 3 years, and we were going to go into that, but I think we'll pick up on that maybe further down the line in another episode.
Well, we might pick up on it today.
Because
we're going to talk about today.
Yeah.
And then we might want to backfill it.
Yeah, but I think we'll come back and circle around into DD.
Put a pin in that, as they say.
Yeah, we won't go too deep into the detail because, we left it at GameStop raising $1 billion and having a massive war chest, no debt, ready to transform. DFV went quiet, and then all of a sudden,
yesterday, which was the 13th of May,
he tweeted.
And he hasn't twet
or xed. I don't know what the word is.
It's nonsense, is what it is.
Xted.
Not nonsense like this.
Yeah.
I think it's twet. He hasn't twet.
Yeah.
Since basically his
3
final
years.
post.
Yeah.
It was 3 years ago.
3 years.
Like, DFV's made some money. He's now off into the sunset.
He's done.
Well done, lad. You did good.
And all of a sudden, he tweets an image of a guy leaning forward in a chair, as in, are you paying attention? This image is actually from GameStop's own social media feed back in February. He's taken their picture, he's made it red. Go have a look at it. And it made everybody sit up and pay attention. Now, DFV, Roaring Kitty, he doesn't know anything that we don't know. He hasn't got access.
He's just a trader. Yeah, he is a trader. He's a proper trader, is't he?
He's a proper trader, but he hasn't got access to any information that we don't have access to.
No, he doesn't. No, none at all.
He looks at the same order books.
Unless he does. But he doesn't.
He looks at the same order books. He sees the same feeds. He has access to the same data.
Yeah.
He doesn't have any special contacts, because if he did, it would all be very dodgy. And
I think it would have. There was a full investigation with him involved.
Yeah.
When the first squeeze or sneeze, whatever you want to call it, when that first happened, there was a full investigation, and he was involved.
Yeah.
So if anything was going to, if he was an insider, they'd have found out.
Yeah.
And they'd have told us.
It would have come out in the wash by now.
To stop this from happening again.
They want someone to blame, and he would have been an easy person to blame.
He would have been a really easy person to blame. But as he says, I like the stock.
He likes the stock. So he tweets this image on Monday morning, and the markets, for whatever reason, when I say markets, in particular Gamestop and a few other, I quote, meme stocks, AMC, BB, COS, you name it.
They've COS.
I don't know, just another stock
Just
that was in this
people have
basket of meme stocks. They've all responded and they've all gone up on no news.
You got to admit that. Why did DFE tweet a man sitting forward on a sofa?
Yeah.
Lead to GameStop going up in value since yesterday, or since the beginning of the week, 365%.
Yeah.
There's no reason for a stock to go up because somebody tweeted something.
No.
That's not market sentiment.
No.
That's one bloke.
It's one bloke. So he tweeted after the back of a couple of successful weeks for GameStop in the market. I say successful, but if you zoom out, it actually wasn't really anything going on. But the last 2 weeks, the stock did rise.
I'm looking at it now, and it
went up 40% over the last 2 weeks.
Yeah, but 40% was.
Yeah, but it's
couple of dollars.
Yeah, it's 40% on a low of $9. So it didn't. It went to $12, $13, something like that.
Yeah, so it's not anything to write home about.
No one paying attention to it.
No.
And if you follow the sort of the social media channels, which I follow in particular, you can see no one's really that fussed about it. They've seen it all before. They've seen the stock go up. We're used to the volatility on GameStop. We've seen it go up 10, 30, 40, 100%, 200%.
Yeah.
And not even blink an eye.
Not even notice it.
Not even, this because we've seen this volatility before. It's going up and down. And the big questions are always like, who is doing the buying? Because it sure as hell ain't retail investors.
Retail haven't got any money left.
They can't.
Not for this.
So the volume which we saw yesterday, Monday the 13th.
Well, what was the volume on Friday?
No, it was just normal volume.
Just normal couple of million trades.
Nothing exciting. I can quickly look it up here. So the volume on Friday, just gone.
He's just looking.
What day was that?
The 10th.
The 10th. So the volume on that day was 36 million. So that's up from. It's okay. So I'll track back a bit. The average volume we've seen is in the region of 3 to 5 million.
Right.
And then over the last 2 weeks, we've seen it creep up into 10, 15, 20, 30 million.
Okay.
So we've had an increase in volume.
Right. But a gradual increase.
A gradual increase. But yesterday, the volume went to 187 million.
There's not 187 people investing in 187 million people investing in GameStop.
No, for media to blame retail investors, 200,000 people would have had to chuck $4,000 each at it, and there is people out there with money, but there isn't 200,000 people chucking $4,000 at GameStop on a tweet.
No,
that just doesn't happen.
It's just not happening.
There are people jumping on it now with FOMO, fear of missing out, which is fine. And there is money happening. There is people buying options. There are people buying the way up. This happens, but just read the insignificant amount of money that retail has compared to the hedge funds, the banks, the institutions, large sort of investors with millions and billions of pounds to play with. They're the ones that move these markets.
Yeah, we don't.
And
retail, for those that don't know, is the everyday person. It's you and I on 212 or Robinhood or whatever.
Yeah, and it's just not happening. So the question is, who's doing the buying, and where's this buying pressure coming from? And that we don't know. We can speculate that shorts might be closing. We could speculate that GameStop is doing a buyback of their own stock.
I think they'd have said that, wouldn't they?
I think they have to file within 3 days of doing that.
Right.
So they could have done it, and then we'd know.
And then we'll find out by the end of the week.
Yeah. We could have people like Ryan Cohen buying more, but he's not buying billions of pounds worth of stock.
He's not buying the rest of the company.
No, he hasn't. No, he would have announced that.
Yeah.
Because I think he would have had to announce something like that.
Definitely.
So it's interesting to see what's happening here, and the volume's just going crazy, and the price is going crazy, and everybody's going crazy.
Everyone's going overnight. So we closed yesterday What did we close yesterday at? I'm just scrolling.
30?
$39 we closed at yesterday.
And I wasn't even that bothered by that.
No.
I think I might have given you... I was more excited that Roaring Kitty was tweeting because
we didn't really. We did go. The price is going up.
Yeah, but we weren't
it
like.
was more interesting that
he was tweeting and telling a story, and
Keith Gill was up to something again.
What's he doing? What's he up to?
Yeah, why is he tweeting?
Yeah,
what's all these tweets about, son?
That was more interesting for me.
Absolutely, like you said, you actually said yesterday. It's almost as if he was under gag order for 3 years.
Yeah,
and now he's allowed to do stuff again.
Yeah,
and what he's actually doing is just being a bit silly. Just going, look at this nonsense.
If you look at the if you look at the tweets, there's a story he's telling about still liking the stock. I think he's saying how it doesn't.
He's still watching it.
He's still watching it. We don't know if he's invested in it. The guy had $50+ million.
He had a lot of dough in it.
I'd take the money and run.
He was still. Imagine if he. We said it yesterday. Imagine if he posted. Imagine if he posted
a position.
He'd only need 50 grand in it now, and it would.
Any position he posted, it would just be. And what would really make reality as we know it collapse is if he posted a purple circle from Computer Share.
Oh my god.
For Computer Share, for those that don't know, are the...
it's an old style investing firm, isn't it?
But I can't remember what they call them now, but they're the registered handlers, or I can't remember the term, it'll come to me in a minute, but they handle the shares for GameStop.
Physical...
They handle the count, they handle...
Almost, if they were, they're not physical shares, they're not certificates anymore, but if they were... They were the firm that dealt with them. Yeah,
they're the partner of GameStop when it comes to their shares. Yeah. And during the last 3 years, someone figured out that you could do a system called direct registration share, where what you effectively do is take your share out of the stock market and place it into their hands. What does that mean? Well, and we'll go into this in another episode, but no one owns their shares.
No. You own a right to the share. It's like money.
You're beneficiary.
You don't own £10. You promise to pay the bearer on demand the sum of £10.
Yeah.
It's all theoretical.
So we're all beneficiaries of the shares.
Yeah.
If you go out and buy stock or whatever on whatever trading platform you want to buy on, you become the beneficiary of that share.
That's it.
The actual share is never yours. It's owned by a company called Seed & Co, who own every share.
Every share.
Well,
on the US market.
On the US markets, every share in America they own. In every company they own. They're worth trillions because they have every share.
All the money passes through them.
Yeah, and for what they call the sake of efficiency, they hold their actual... Because back in the day, they used to send the actual shares about.
Yeah.
Actual paper certificate used to fly about.
Yeah, you bought 1,000 shares.
Yeah.
And you'd have to go to the office, sign, and then the man would give you a packet of papers, wouldn't he?
And then that packet of papers could have been sold by the time it was delivered to you.
Yeah.
And then they're like, oh, right, so this is where it all used to take like 2 or 3 days to settle these things, or a week to settle these things. It doesn't now, it's all electronic.
It's immediate.
But we still have these hangovers.
But the system behind it isn't, is it?
We still have the hangovers of that day where we have T+2, 3, 4, 5 days to settle trades. Yeah. Even though we don't really need it because it is all
immediate. And
it can be recorded that way.
Yeah.
So anyway... Seed & Co hold it, and Seed & Co are owned by the DTC, which is the Depository Trust Corporation or something like that. The DTCC. Anywho, they own all the shares. We're just mere mortals on the ground are just beneficiaries of those shares. But someone worked out that we can remove those shares from Seed & Co and the DTCC and essentially place them in our own little safes in Computer Share. And under, I think they call it book, you book the shares.
That's it, yeah.
And
what it does, it removes it out of the quick acting system.
Yeah.
So now, to sell a share from Computer Share, you got to ring someone up basically. You got to call them up, send them an email.
You can just do it. You can just do it online.
What I mean is, it's not an automated.
It's not.
Service. It's not a buy and sell button.
Yeah, and
it's an email and it's some words you got to write.
If you take it out of that, a bit of ability for them to use that share as collateral, which is the key thing, and it removes the ability for that share to be shorted and loaned out and traded 1,000 times without you knowing. And by doing that, this one Reddit subreddit called Superstonk have removed 25% of shares available in the market. The goal is, I think, for them is to go to 100% of the float available shares and see what happens. Watch the world burn.
The price hasn't moved since we've been recording.
I think it's in a consolidation period, is what they call it.
What I mean is the market isn't. It's been halted.
Oh, is it on hold again?
Yeah. We've been halted for like 10 minutes. It is not. Yeah, it is in what we would call a consolidation period. It's at $50, which is absurd.
Yeah,
but it's at $50,
and it's on halt. So when it opened this morning, I think it halted like 10 times.
It's not. We haven't got enough candles.
Opened, halt. Opened, halt.
It's going all dotty, you know.
So by removing all this liquidity of shares, it's making it harder for companies that might have shorted the stock, who have loaned out the stock and sold it, and they're now trying to find locates, and making it harder and harder for them.
Yeah, so going back to our analogy, our basic explanation, this is the point where the price goes up because the short sellers have to now buy back the shares that they sold to give back to the people they loaned them from.
Yeah.
Or that they borrowed them from.
We touched that on episode 1 on what that meant. And now there's potentially not enough shares about there for them to close out their positions. Now, the reported short interest, I say reported, I don't want to talk about any theoretical actuals or what might be believed. The reported interest is short interest is something about 25%.
Right.
It's about that. Many believe it's over 100%. And it used to be reported over 100% back in January 21. It said over 100% of the shares available have been sold short.
Well, they did say that before all this took off, didn't they? In January, they were honest about it. They didn't say anything, and then we all picked up. Well, Keith Gill picked up on it, and through that, it spread through Reddit and to us. And you're like, oh, hang on a minute, this is a thing, and then it all went, and then all the numbers completely changed.
Yeah, and they all got very dodgy and very dark, and lots of meetings behind closed doors, and
that's what it felt like.
And whatnot.
So what's the reason for today's shift, do you think? Is there a reason for it beyond DFE tweeting?
In terms of the price going...
Wasn't there something to do with like basket shares or basket...
No, so I think... So DFE tweeted, we saw price rise. I think...
But it's not going to have gone up because he tweeted.
No, it's not. I think it's coincidental. And we're seeing the price go up and people are jumping on board, helping that buy pressure. If you buy stock, you do help the buy pressure, even if it's 1 or 10 or 100.
Well, you
help
that,
it a little bit.
You know, the research that we've done pretty much says that no, when you're buying from the traders that we buy through, you don't buy on the market.
I think when getting examples like this, it's... And we're not going to talk about dark pools and stuff now, because that's getting complicated.
This is a place for complication.
It is, but this one in particular, this special alert episode, is about the here and now, and just what's going on, because it's crazy.
It's mad, isn't it?
Yeah,
it's mad. It'll be good to see where we end up.
So we're seeing, back to the meme stock baskets. We're seeing Roaring Kitty is associated exclusively in these terms with GameStop. He was invested in other stocks, but he was never invested in AMC.
He was never invested in the other meme stocks, was he?
No.
It was because he's a proper stock trader. From what I understand, so he's not going to go, oh yeah, BlackBerry because it's part of the GameStop meme.
Yeah.
He's never spoken about the others.
He's not spoken about.
Always been GameStop.
Yeah.
And then whatever else he was talking about.
So seeing all these other stocks kind of surge with GameStop, it just makes you think about these DDs as points, bits of research or fingers pointing to what is being quoted as a basket of stocks, which has been lumped together in a product.
Yeah.
And being shorted or sold in the market, and something which we don't have access to.
There's obviously something with these particular stocks that are now called meme stocks.
Yeah.
But before they were meme stocks, they must have been brought together because all of them have gone up.
Yeah.
And nobody's talking about any of the others.
Yeah. GameStop's gone up over 100%. AMC's gone up over 100%.
I'm still losing.
And it's crazy. Like, what are these? We don't have access to these products, but there's going to be something out there like what we had in 2008, where we had I think they're called CMBs, commercial mortgage bonds, or
the financial crash that was caused by the mortgage bonds.
They weren't commercial mortgage bonds, were they? But they're mortgages, so they're taking mortgages and they're putting them into a product.
Yeah, they were packaging them together, and if they performed well, they paid out, and if they didn't, you lost the lot.
The idea is you could take a load of subprime mortgages,
yeah,
package it up nicely into one new product, and because you've got 1,000 subprime mortgages in there,
averagely they'll pay out.
The risk goes down, the reward goes up, and you can sell all these packages all day long for millions and millions of pounds, which is what happens.
Which might be what they've done here.
So there's something that's gone on here with these stocks.
They're packaged them together. They might have just done the same thing, but with poorly performing companies.
Yeah, and they put these into bonds or whatever.
Yeah,
something we've not.
Well, it's
seen.
going to be a bond, isn't it? I think that's probably the name for it.
And some people call them swaps. And anyway, it's something that the everyday investor doesn't have access to, and you can't really pinpoint it. But it's just theory, because when you look at GameStop and AMC and all these other meme stocks, and they all rise and fall together, you just got to sit up and go.
You've got to think why. There's no reason for them to be.
Yeah,
no reason.
None at all. And some of these companies are taking advantage of it. AMC, they did an at the market offer. They raised $250 million.
Did they really?
Yeah, they did that this morning. Well, they did it yesterday, I think, but they announced it this morning. But they were selling at $3.50 a share.
Were they?
And I think they're at $9.10 now.
Yeah. Well,
so they've missed out on a potential $750 million.
Imagine that.
they all of a sudden could have had close to $1 billion in cash on hand.
Imagine that. They're trading at $7 a share.
Are they?
But they were, as you say, they were. Bloody hell! What were they? Basically nothing. I can't see it properly.
So they did that.
Yeah, they were $3 a share.
Yeah, they did that. And I think what would be really magical if GameStop did the same thing, but raised another $1 billion.
Imagine if they did that.
Imagine if they did that. We've got $2 billion now.
We've got $2 billion in cash and no debt.
And what?
What firm has got that? Yeah, and what?
What are you going to do?
Yeah. How much money has some of the top firms got in cash?
Yeah.
They ain't got that kind of money.
We've got $2 billion in cash. We've got an executive team that's not taking any salaries. They're not getting paid.
Are they not? They're not taking any money still?
None of them are getting paid.
Wow, they're going to have good pensions at the end of this. Wow, they're going to have some
They're not
money.
getting paid. They've got their stocks, and they rely on their stocks to go up.
Are they really?
And not just go up on these little sneezes or squeezes.
They want it to. They need it to be fundamental.
It needs to be long term.
Yeah, long term.
Proper growth.
10 years, 20 years, actual growth.
Yeah.
Amazing.
What do we do?
Sure. we just sit on the rocket and wait for it to launch.
Yeah.
That's all you can do.
And for the sake of transparency, I think you've probably got to say these things. I've got a number of shares, and you've got a few shares as well, haven't you?
Yeah, we've got skin in the game.
We've got positions in it. This isn't financial advice.
All that nonsense.
And all that, yeah.
This is just two blokes rabbiting, remember?
Yeah.
We're not telling anybody to buy anything. Especially not now the price has gone up, because you will lose. Don't buy once the price has gone up. Only ever buy when the price has gone down.
The thing is, you can't time these things, can you?
No. Well, I think the biggest thing I've learned is you never buy on a green day. You never buy on a green day. You always buy on a red day.
Yeah.
If you buy on red days, Unless the company goes bust, of course. You don't usually lose too much money.
So just looking at the chart
Says the
now.
bloke that's over £100 down on an account.
So
500 quid in it. 20% losses, yay!
So if I look at their earnings,
Tax deductible, isn't it?
so the last earnings were, well, we talked about it, how they basically had a profitable year. They did have a profitable year, and it was the first profitable year they had in a number of years, and in that time, it went down from $15 on the day to a low of $9. The stock went down on good news.
Going down on good news.
It's going down on good news, and here we are on no news.
Going up stupid amounts.
And it hit over $80 in pre-market.
It did, didn't it?
Yeah.
It did, didn't it? Oh my god.
And
how many broken Range Rovers would we buy?
$80 in pre-market. Think about the highs of January 21 were only $120 post-split.
Oh, you know, that was my point I was going to get to.
It was nearly...
we are close to the all-time highs.
Yeah. And I've been watching a lot of Bloomberg today. And when I remember watching Bloomberg back in January 21 versus now, a very different approach to and very careful of what they're saying.
Oh, are they?
Yeah, they're very careful of what they're saying. And
give an example.
This one guy came on.
Yeah.
And he said, "This ain't retail investors. This is Wall Street."
Oh, really?
Yeah, and they kind of were a bit uncomfortable with him saying that.
Were they?
And they're trying to make up these excuses like, "Oh, well, the fundamentals have changed now," and so on and so
which
forth.
we've all been saying for 3 years now.
And yeah, the fundamentals have changed, but for all of a sudden to go, yeah, today's the day
everyone's going to start buying.
Turn this from a $2 billion company to a $15 billion company.
Yeah.
Along with everything else.
What does it mean? Why?
Ken Griffin is the CEO of Citadel.
The Citadel are one of the market makers. In
One
fact,
of the
they're the
market
main
makers.
market maker from what we can gather.
Oh, we've got a lot to talk about.
Bum, 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 bum.
How much he controls. But he
Shocking.
was on Bloomberg, but he was in Qatar.
Gata.
Investment forum. So he was doing a chat all whilst this is happening.
Oh, really?
I was just studying him just to see if
see what he's like, see what he's doing.
But
See if he's sweating.
No, he's fairly chill.
Was he?
He was fairly chill. They're all been a bit chill about it. Almost like they don't want to throw petrol on the fire.
Well, everyone's learnt not to say anything. I
Yeah.
think even Reddit's probably quieter than it has been. I think it's sort of zhuzhing up a bit. I don't know. I haven't looked. I'm asking you.
It's mental.
Oh, was it mental?
Yeah.
Oh, never mind.
It's mental.
Is it?
Yeah.
Oh, that's exciting.
Yeah.
It's
Twitter's
exciting.
mental. Reddit's mental.
Oh,
it is fun just watching
That's great.
all the
Everybody gets
speculation.
So excited. So many people investing too much money at a high.
It's fun. It's fun.
Oh, brilliant.
It is fun, and I do. Yeah, I think it is good. But let me know if you see Van and Company, buy. If you want to buy it $50, buy it $50.
Hey, you know your money. Do what you want.
Yeah.
There is no right or wrong way until it's happened.
Yeah.
Is there?
No.
Like in January, February 21 was it? Was it end of January?
Jan 21. Yeah.
In January 21, it wasn't a mistake to have invested at $150.
It was going to 1,000, wasn't it?
Because it topped out at 350. We got it
Yeah.
to like because our numbers are different because of the retail systems that we're on.
Yeah.
They're always lower.
Yeah.
Aren't they, by 10% or so? But yeah, to buy at $150 wasn't a bad idea because you'd have doubled your money if you pulled out at the right time.
Yeah.
We just didn't.
No.
We were sold secure.
But still.
Very exciting.
Still.
So I think that's the end of our emergency update.
Emergency update. Paying close attention to it.
Yeah.
Personally,
Try not to wet ourselves.
I'm only selling when I'm a billionaire.
A billionaire. Yeah. Joe's a good gambler. Just keep going.
I'll take the billion or nothing.
Yeah. All or nothing, please.
Everything in between doesn't matter.
Anything in between is just a loss.
It's just not going to affect anything in my life. It has to be life-changing amounts or nothing.
Or it might as well not come back because it would just get spent.
You'll be happy to get a set of wheels out of it, though.
Oh no, mine's a lottery ticket. No, it doesn't matter what mine's. Mine is a lottery ticket at this point. I've only got a couple of shares in it now.
Yeah.
But just lottery tickets.
You could get wheels out of it.
I've got plans for the wheels. We're not talking about that on this emergency broadcast, though. Right.
Emergency broadcast.
That's the end of that. Thanks for listening.
See you next time.
Ta-da. Bye-bye.
Where the bad pianos start to show, keys all out of tune, just watch them go. Welcome to Adam and Joe talking nonsense on the Outside Scoop podcast show.